Gaps, my partner Omar Saad on the softline side is all over that. I would say that apparel in general, I think, has had some challenges just given the competitive nature of the space. And that's something we'll certainly be watching going forward into the back half, especially if tariffs kick in more broadly on apparel.
I mean, how much of all of this softness and disappointment in retail has to do with tariffs?
You know, I think the disappointment is more about the sentiment and margins and guidance than it is about the actual sales results. If you aggregate U.S. retail sales, this year we're running about up 3.5%. That is a deceleration from last year's 4.3, but still better than it had been running in the last 5 years. So the consumer to us looks like in a reasonably healthy shape. The problem is competition and margins. I mean, the reality is Amazon is still 25% of U.S. retail dollar growth, and we don't see that going away. And for weaker retailers, that's putting some pressure on them.
Greg, we were talking earlier about the fact perhaps Walmart's seen its gross margin bottom and fractionally improve. Do you think that's not the case for the broad sector at the moment?
Well, we're still seeing everybody roll in, but I think if you look at overall the retailers, I think it's hard to see how margins really expand this year. I think Walmart's a little bit special in that they've invested a lot of margin over the last several years. And they're now finally starting to bear some of the fruits of reducing their e-commerce losses as they get that business to some sort of scale. So I think Walmart sort of hit, at least in the U.S. business, globally it might be a little different, some stabilization in their margin.